Good morning, good afternoon, good evening, from wherever you're catching me from. Welcome to my channel. I'm Seth Owas, your trainer for this entire series. This is actually my first YouTube video, and I'm not a professional YouTuber, so bear with me with my poor presentation skills or my poor sound, okay? Please just concentrate on the skills I'm going to teach you in this series. I've created this channel to help new and struggling traders to be able to trade and make some profits to be able to feed themselves and their families. In this entire series, I have titled it Trading for a Living. The idea is for anyone who desires to be a day trader to be able to learn, trade, and become profitable within a period of 90 days. Trading is a very tough business, so I'll urge anyone to acquire the right skills and knowledge before putting their hard-earned money in the market. For today, we'll be looking at trading basics and fundamentals. And if I say fundamentals, we'll be dealing with the foundation of trading and the day trading industry in a whole. So in this video, it's not for just beginners, but anyone who has been trading and still not profitable yet. If you have already lost fortunes in the markets, it's not too late to learn the right skills required to become a profitable trader, okay? And for anyone who has interest to become a day trader, feel free to watch these videos because you are going to learn a lot in these videos. Day trading is the ultimate way to financial freedom, and I will urge everybody to learn the right skills required to become a profitable trader. But before I go any further, I will ask everybody to concentrate on the first three videos because we'll be covering a lot of basics and fundamentals on which all your trading career will be built. And in case you don't understand anything, feel free to email me at daytradeforliving@gmail.com. daytradeforliving@gmail.com. In today's lecture, we will cover what is trading, who is a day trader, the type of traders and time frame they trade, the asset classes for you to select and trade, and we will conclude with some things traders do that hurt their account. Okay? But before we go any further, I would like you to hit the subscribe button and like my video. You know this is a new channel and I want to help me to grow this channel, okay? So let's start with the basic question. What is trading? Whenever I ask this question to my students, more often than not, I get answers like investing money. So I really get surprised, and I get surprised at them because guys, investing is completely different from trading. To invest means you put your money in an asset or a business that you trust with the hope of getting returns in the future. And the future can be a year or 2 or 3 or 4 or 5 or even 10 years. So investing is completely different from trading. In investing, the only work required is the initial stage where you as the investor, you spend time to analyze the business or the asset in which you are putting your money into. Afterwards, the next skills required is the patience to wait for these businesses to grow or these assets to grow with your money. But guys, in trading, it's completely different. Trading is a business on its own. In trading, you are the one running the business. In trading, you buy and sell assets, commodities, or these businesses within a short period of time. It can be hours, it can be days, it can be weeks, or even months. Trading requires more time, activities, and good skills. Let's use the analogy of how traditional businesses run and how they operate. In traditional businesses, you buy and sell physical commodities like fruit shop, like clothing store, like sanitary wares, like cars, like maybe anything else. So what do? You need the right skills to know when to buy these items, when to sell them, and how to sell them. So as in trading. But in investing, it's completely different, right? So please never miss the two. So in the financial market, this same concept applies. But here, we buy and sell securities. And what are securities? These securities are the data derived from physical assets or physical businesses. So we buy and sell securities to make profit. That's all. The value of these businesses are data transformed. So the value of these businesses are transformed from physical businesses into what? Graphical charts. So as a day trader, you must have good skills and knowledge behind how these businesses operate. So being a day trader, you buy and sell these securities within the day. You wake up in the morning or whatever time you are dedicated to trade, you sit in front of your computer and you analyze the data behind these businesses. That's what you're going to trade. Your positions will be held within the day. It may take 15 minutes, 1 hour, 4 hours, or even a day. You can't tell, but your positions will be closed before the day end as a day trader, okay? As a trader, you take your profit fast and you cut your losses very, very short. You don't stay in a losing trade to lose all your capital. No, that's not how you trade. So, trading is, in simple terms, the act of buying and selling securities within the trading day. But many a times, people come into this market and lose all their money. Why? It's because they have no idea of what they are doing. They come to this market thinking it's a way to multiply their money without any hard work, knowledge, or any skill. So they have no idea of what actually they are getting themselves into. So why does it actually happen this way? Because they might have heard someone or they might have been influenced by someone saying, oh, there's an investment. Just put your money inside and in 2 weeks it will double, to multiply it. Oh, you have to buy stocks. Oh, there's Forex. So go and buy Forex. Oh, crypto. Crypto is doing well. Go and buy crypto. And so what do? They also listen to this noise and they end up losing all their money. Let me tell you something, guys. In traditional businesses, though you can lose money, but not as fast as in trading. Let's say you bought stocks for clothing, right? You want to have a clothing store. And you bought the stocks with your capital. When you came to your shop, no one bought the clothes. So what happened? You still have your stock, right? You still have your clothing stocks there. You can go back and resell them at wholesale price. But in trading, the moment you enter the wrong trade, you lose all your money immediately, instantly. You start losing money the moment your trade is going against you. That's it. So trading is very simple if you know what you're doing, but it's a very dangerous game if you have no idea of what you're doing. It's a very dangerous business if you have no knowledge or no skills. You will lose all your fortune in the market. So trading is a very serious business and it should be taken as such. It's just like starting and running your own company. The time, the effort, and the knowledge required to start is the same here, just that in trading you require less time. I normally see new traders and you see them trading on their phones, and I question myself, are these traders serious at all? How can you become a professional trader trading on a small phone? Huh, guys? Or you have been deceived by the Instagram or the YouTube braggers and showing you fake profit on their phones, so you buy into the idea thinking trading is an easy way to multiply your money. Guys, don't do that, okay? No wonder most people lose all their money. So guys, trading is a serious business. Please don't joke with it, okay? There are so many things you cannot do with your phone. So get serious, okay? Don't do this. This is no. Get serious. Get some computers, at least one or two, or maybe a laptop. Whilst you learn and you become profitable, you can top it up and get more screens so that you make your work more simple and more interesting. Get your computers, and then you analyze the market, learn, and analyze again, and you trade. In trading, there are different ways to trade. These classifications are based on the amount of time a trader uses to trade. The chart window time frame in which a trader analyzes the trade determines the type of trader he or she is. And some traders prefer fast and quick trading. They prefer to enter the markets and take profit fast. They are called scalpers. So a scalper is someone who enters the market quickly and exits quickly. Does it? Another trader will also decide to trade not too long and not too fast. And they are called swing traders. These guys, swing traders. I'll come back to this one later. Swing traders. So it's a swing trader. Swing trader is someone who enters and exits the market not too fast, not too long. So it may last for a day, 2 days, 3 days, or maybe a week. There are others who also just want to buy and hold for a longer time. So their positions take from maybe weeks to months. They are called position traders. And also, there are some other groups who don't just want to waste their effort and their energy, but they have analyzed the market, they have analyzed the business and know that no, this business has potential to grow. So they buy and hold these businesses for a longer period of time, like a year or 2 or 5 years or 10 years. And they are called investors. So why do they do this? Because they have analyzed and trusted the business, so they know that this business is going to grow in the future. So they deposit a lot of money into the business capital, or they buy more of the stocks of the business, and then they wait for it to grow. So they are called investors. But we are day traders. We buy and sell securities within the same day. Our trades may take maybe 30 minutes, an hour, 2 hours, 3 hours, 4 hours. We can't tell, but our positions will be executed by the end of the day. So which style is the best? Well, it depends on your style too, your time and your objectives. We decide to be day traders because it suits our time and our style. I'm sure you are learning to become a professional trader because you want to quit your job and fire your boss and start your own business and be financially free, right? Or maybe you want to trade and manage this as a side business. So we choose to be day traders. I would not advise you to do scalping because lower time frame charts are too choppy and the chart data can be very erratic. It's very easy for you as a beginner to lose all your money. You can have a lot of losing trades. So I will not advise you to become a scalper. Or maybe you have a profession and you want to trade. So I'll advise you to become a day trader or a swing trader. But don't forget, after you become profitable and you quit your job, you come home, swing trading will be very boring for you because swing trading also takes a lot of time. It will be very boring for you and you end up even switching from your objectives or your goal. So I'll advise you to become a day trader, okay? Become a day trader just like me. You wake up in the morning and then you earn all your trades within the day. That's all, guys. So why are some traders able to trade within minutes or hours and others are able to trade for a longer period of time? Well, how is it possible? It all has to do with what? Time frame. Time frame. So what is time frame? Time frame is a chart window through which a trader will be analyzing. So you as a trader, you'll be analyzing this chart window. In trading the financial market, data of the various businesses, as I explained, or the various companies or the commodities or any asset, they are represented on a graph. The graph you learned in school, the graph you learned in high school, the graph you learned in college. These same graphs, that is what we see here. But this one is more complex and more complicated. But it is a graph, guys. The graph contains the price, the volume, time, and any other thing traded in the market. So the price is represented as candlesticks, bar charts, or line graphs. There are also other ways to represent this data on this graph, but the most common ones are the candlesticks, the bar charts, and the line graph. Okay, so keep that one in your head. Candlesticks, line chart, and bar graph. So remember once again, time frame is the chart window through which you as a trader, you'll be analyzing to make technical decisions. So let's take a look at the chart here. You can see there is a graph and some lines on it, right? These are called candlesticks. Aside that, there are some red and blue lines. Please forget about them for the meantime. Focus on the candlesticks. So focus on the candlesticks and the graph itself. Here we are on a time frame called 15 minutes time frame, M15 time frame. Time frames are more, not only M15. It starts from M1, M2, M5, M15, M30, 1 hour, H4, week, and month. It can be changed. So the style depends what you select. So these time frames can be changed. So if you view on any chart and you see M15, what does it mean? It means that, see, M15 is highlighted here, right? Good. So if you see M15 on any chart, it means that every candlestick on this chart represents 15 minutes of trading activity in a particular asset or a stock or maybe a commodity. So every candle, if it's M15 chart, it means every candle represents 15 minutes of trading activities of a particular stock or a commodity or an asset. Note that the size of the candle does not matter. Whether it is long candle or a very short candle, it doesn't matter. So far as it appears at a single candle, it is representing 15 minutes of trading activity. So don't worry, we will discuss more on candlesticks later in these lessons. Now, look at something here. This is also M15 chart. You can see these candlesticks are a bit bigger than the previous one, right? But they are also M50C. The M15 is highlighted. Can you see? Which means each candle on this chart represents 15 minutes of trading activity. And as I said, the charts can be zoomed out or zoomed in. So the size of the candle does not matter. I can even make this one more bigger for you to see. So put in your mind, whilst you grow to become a professional trader, you can set your preferences. You can set it based on how you want it. So as I said, the size or the color does not matter. With experience, you will choose your own style. Okay. This also M15 chart, and in this chart, assuming you bought it here, you bought this asset here, this is a currency pair. So let's assume the market went up, it came down per your strategy. This is a strategy actually I trade. I decided to buy here on this candle after this candle closes, so I entered the trade somewhere here. So how long will it take me to reach my target price, my profit target? So let's see. You count the number of candles. So 1, 2, 3, 4, 5. So let's see 5 candles. So you multiply 5 by the time frame we are trading. So maybe 5 candles times 15 minutes, and you can get the amount of time this trade took. Note, this is not how profit is calculated. This is just to tell you how long a trade may take. To calculate your profit is a different matter altogether. We will just go over them later. So just focus on the time frames, okay? Now look at this chart again. This is also H1 chart. See, H1 is highlighted. Can you see? It's highlighted, right? So what does it mean? It means each candle you see, no matter whether it is small or big, represents 1 hour. H1 is 1 hour. 1 hour of trading activity of a particular stock or a business or a commodity or any asset. That's it. So once again, the size and the candle does not matter. The size and the color of the candle doesn't matter. You can see there are some vertical lines here, right? These vertical lines represent the daily separations. So which means that in a day, you count the number of candles in a day. So this is a Forex chart too. So let's assume you enter a trade somewhere here. Here you will not be lucky. You will not exit your trade before the trade ends because maybe your target might have a little space, a little time to reach. So which means that you wait a while for the next day. So sometimes as a day trader, some of your trades might eat into the next day, but not so often. Okay. Here is also a 4-hour chart. See, H4 is highlighted, right? Which means every candle on this chart represents 4 hours of trading activity. So you see, the size also does not matter. The same size, the same color, but see, this is H4, which means every candle on this chart represents 4 hours of trading activity. So you not always see these line separations. See, there are line separations, right? This also represents weekly line separations. You not see them on any charting software unless you configure them yourself. So you go to the settings or the properties and then you configure these lines to appear, but you not always see these lines. Assuming you took a trade here, let's see you took a trade somewhere here, right? Let's see how long will it take you to end here. Count the candlesticks and multiply by 4 hours and see. Let's see how many can we get. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So multiply 12 by 4 and you see how many hours. Almost 48 hours, right? For this. No, sorry. 48 hours is like 1.5 days, right? So almost 2 days. So this time frame will be for someone like a swing trader, not a day trader, but most of the time swing traders use 4 hour time frame. Here is a daily time frame. See, daily is highlighted, as you already know, which means each candle on this chart represents 1 day, 1 whole day of trading activity. So 1 day, 2 days, 3 days, 4 days, 5 days, 6 days, 7 days. So each candle represents 1 day of trading activity. As I said, the size does not matter, the color does not matter. So far as it appears on the chart, it is a day of trading activity. So because of these time frames, people are able to trade in their own way to suit their preferences. If you want a faster way, or if you want a little slow, a little fast, or maybe you want a slower one. So it all depends on your style, your schedule, and the amount of time you can spend in the market. That's all. So what can you trade as a day trader? Surprisingly, there are a lot of assets, a lot of asset classes to choose from. A lot. You can trade forex, can trade stocks, can trade commodities, can trade crypto, can trade metals. When you take these asset classes, they also have a lot under them, a lot of divisions. So let's take forex for instance. In forex trading, forex you are trading currencies, right? One nation's currency against another nation's currency. So in forex you can trade the pound versus the dollar, the Japanese yen versus the dollar, the Japanese yen versus the euro, the pound versus the euro, and so on and so forth. So there are a lot to choose from just under forex alone. Can you imagine? Just under forex alone, there is a lot to choose from. You can also trade stocks. And what are stocks? Stocks are data derived from physical businesses. So when you are buying a stock, it means you are buying part of the business. Whether you're buying it for a second, you are still buying part of the business. So you can trade Apple stocks, you can trade Meta stocks, you can trade Amazon stocks, Coca-Cola, Tesla, and a whole lot. So there are a lot of categories to choose from. So in summary, you'll be buying and selling assets as a day trader. You'll be buying and selling securities as a day trader. And note that you must have the right skills and knowledge needed to analyze these different types of markets. So in conclusion, I will end by saying this. Trading is not a fun game. Trading is not gambling. Trading is not free money. Trading is a serious business and requires specific knowledge and skills. If you are listening to me and you are a new trader, do not trade now. Please, wait until you learn enough from these courses. You need to acquire some kind of knowledge and skills to be able to put your money in the market. And if you are not a new trader, but you have been trading and losing money, still losing money, and you are still putting in your money and still losing money, please stop trading. Just stop trading. Withdraw all your trading activities. Wait and learn enough from these lessons to grasp the proper understanding and the concept of how the whole market works and how to profit from the market. This is Seth Owa as your trainer for this series. Please like, share, and subscribe to my channel. And see you in the next video.